The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets in positive territory across the board right now. You're looking at the S&Ps up by 24 points. We're trading at 39.60. That's 0.6% in the positive. You check it out on the chart. Where are we up to? We're right up to the high of where we fell off yesterday, though. Critical area, we'll see how we trade coming into the opening bell just more than 20 minutes from right now. NASDAQ 100. Pretty similar action. Look where we are, kind of right near that spike high, 930. Also back up to that area at about 11 a.m. yesterday, trading at 11,578. You get the Dow up 143 points. Similar action, man. We're just trading to the highs of yesterday, folks. So yes, you get a little bit of a reprieve in the markets with positive action, but keep things in context in terms of where we are. All we're doing is chopping around with where we were yesterday to the highs before we traded lower to close out the session. The Russell, pretty similar area as well. The Russell up by 11 points. That's 0.6% in the positive. Bitcoin, pretty low volatility in Bitcoin, right? Remarkable, as Bitcoin hovering still somewhat near 17,000 at 16,800. How about crude? We got a Keystone Pipeline spill this morning. That is putting a bid into the price of crude this morning, up by $2.45 to $74.45. You were as low as $71.75 just yesterday. Gold contract back above 1,800. Gold up $4 on the session at 18.02. Silver is up 35 cents. Check out that acceleration, man. Silver up more than $1 over the last 2 days from the low of Tuesday afternoon of 22.19. We're trading at 23.27 right now. And we jump to notes and bonds. A little bit of a reversal right now in terms of where we are. Now, we got some economic data out there this morning. We got some jobless claims numbers out there, continuous claims up there, up a bit, I should say. But right now, you got the 10-year. Negative by 18 ticks. You see from where we were yesterday, quite the acceleration to higher price, lower yield yesterday. We give back some of that. We're sitting right now at about 4.84%. The yield on the U.S. 10-year as we're back 18 ticks on the 10-year. The 30-year off a full point right now at 130.29. And we jump over to the volatility index. I was chatting with our man Kevin Hincks yesterday. We'll talk to him again today. All things considered, right? VIX just chopping around at $22 and change, 22.73 right now in the volatility index. And as we finish up this market wrap up, let's jump around to the dollar index as we pull back under 105 right now. A little bit of weakness in the dollar as the dollar at 104.99. We jump over to the dollar yen. Dollar yen right now pulling back to 136.59, basically flat action. We jump over to the euro as we wrap it up. Euro US dollar sitting at about 105.25. All right, what are we going to jump to? Let's jump to some of the FANG stocks and see how they're moving today. Apple, man, you talk about a pullback. Now, Apple's got about 16 billion shares, folks, outstanding. Okay, I remember that one because, boy, pretty remarkable in terms of the number of shares. Yeah, 15.908 to be exact. So round it up, Apple's got about 16 billion shares outstanding. This week alone, from the spike high of Monday to where we were Wednesday, $160 billion in market cap lost. You talk about some pullbacks, man. Tuesday was a big one for Apple. You trade a little bit lower yesterday. We're getting a little bit of a reprieve today, up about $1.50 for Apple. So they're going to pop about 1% on the open for Apple shares. I tell you, folks, Amazon, right? They're catching a lift as well. I'd be interested to see what happens with Amazon if anything comes out in terms of yesterday's action. I was talking about it on the program yesterday, trying to make a couple purchases prior to my program yesterday on the Amazon mobile app. Couldn't do it. Never seen that happen before. Pulled it up. It said there was some kind of glitch, showed me some kind of screen. I said, okay, there must be a glitch. I kind of hit the refresh button, assuming Amazon has glitches, but maybe for a second or two. No, I couldn't order anything for hours yesterday. Some of the tigers in the den saying they had similar action. I was able to place that order by last night, so it looks like it's resolved. But boy, you think about the amount of money that may be lost every single minute that somebody can't order something on Amazon. They were dealing with some woes, man. AWS having some problems earlier in the week, continuing yesterday. And yeah, we'll see if anything comes out for that, because I was very surprised, talking to my dad a little bit about that yesterday, very surprised in terms of how long They were having problems for AWS, it seemed like, whatever it was going on for the ordering process for Amazon. Let's jump over to Microsoft. Microsoft's going to be up about 50 cents today. Yeah, we got to talk about Tesla, man. Tesla, there's a drop-off for you. Elon, he's going to leverage some of his shares again for his personal quest of making Twitter the biggest company in the world. I kid. Those are my words, folks, but somewhat true. We're pushing some pretty dicey territory here. You back it up. You got Tesla. It's going to open at about 171. This is a weekly. A couple weeks ago, you had a low of 166.19. You're pushing into prices that we have not seen, folks, in 2020, let alone we were above. What were we at in March, April? 384, and you're going to open at 171. And let's jump over to this one to start it off. Why not, man? Because this one's an interesting one. Where are we? Oh, come on. I got too many good articles up there. Forgive me. I'll have to pull it up after the break to find the exact one. Maybe it was just in here? No, it wasn't. I had the article up. Maybe it was in here I was looking about? All right, shame on me. I got to pull it up. All right, let's start it off with oil then. Since this is a mover and a shaker, oil rallies as the Keystone Pipeline. Yeah, they got a leak in Nebraska, folks. So you got crude trading higher. And that pipeline can carry 600,000 barrels a day from Canada into the U.S., halted after a spillage into a creek, no timeline given. Yeah, not what you want to see, man, in terms of environmental, the crude, just pouring into areas off of that. And I imagine this story is going to have some legs because that Keystone Pipeline politicized in pretty dramatic fashion, and you got a spill. And that's really the argument that goes on there. You know, the people that want to build the pipelines, they always say that it's safe, there'll be no spill. But nonetheless, we're going to see how that plays out, and I'm sure the details will continue to trickle out. But nonetheless, we got higher crude coming at you this morning. How about rental prices? Manhattan apartment rents inch up. I think I saw 50. Okay, so let's see. Median rent rose 2.1% in October to $4,095. I saw a CNBC article here. Average rent, okay, so median was $4,033. The average rent fell slightly. Okay, so here you go. And this is a great demonstration of the difference between a median and the average. The median is the middle number. Okay, so let's say you have a sample of 10 numbers. You take the fifth number in between. What that does is that eliminates some of the skew of some of the highest price numbers and maybe some of the lowest price numbers that really deviate from the median number. Right? So let's say you have 1,000 residents, okay? Tell me what the 500th resident in the middle is paying for their apartment, okay? Don't tell me the average, because if Elon comes into New York and pays $5.2 billion for a building and he wants it all to himself, that's really going to skew the average, even though it's not representative of what the person in the middle is paying. Nonetheless, folks, the median rent, $4,000 for a Manhattan apartment, going up. Now, it had been down the last few months, okay, but nonetheless, you got to tick up. This one's going to be an interesting one, of course. Shelter playing a big component in the CPI. I talked about on my program last week the difference between the CPI and the PCE. And yeah, CPI, a much bigger impact because that is what consumers are spending. The PCE encompasses everything that you use, even when you got third-party payers in there. But shelter, man, it's a big one. Rent's going up in New York, $4,000. That's after tax, spending $48,000 a year, folks. We'll continue this conversation. We'll talk to our man Kevin Hincks when we get back. Stay tuned, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&P futures right now up by 17, Nasdaq 100 up by 51. You get the Dow up by 100, by 100. All the markets in the green right now. Let's jump over to our man Kevin Hincks every trading day, folks. 12 noon Eastern time, right here on Tiger TV, the TD Ameritrade Network with Fast Market. Your host, Kevin Hincks, Tom White, the whole team. They do an outstanding job, folks, breaking down the day's market action. They get some great guests. They walk you through hypothetical trade setups using options. They had an outstanding show yesterday talking about whether it was Airbnb, Expedia, travel, and I didn't even realize the size of those companies, man, whether it's VRBO, everything encompassed. But, boy, we jump into another day today. Kevin Hincks, good morning.
Morning, Ryan. I'm sure a lot of your viewers, like we are trying to make sense of what's going on right now in the market and how we can raise. If you put 10 days, look at the see the November 30th Jerome Powell melt up in the market, and all we've done since then is give that entire move back slowly over the next 5 days, and yields going from 3.79 to 3.4, and the dollar coming down. What is that telling us, Tommy? And you have to pay attention to not only the economic data that we're seeing, but Tommy, have you noticed in the last couple of days, Jamie Dimon from J.P. Morgan, Brian Moynihan from Bank of America, Charlie Scharf from Wells Fargo, all talking about slowing consumer spending. And we have to default to them because they get the data. They see the swipes of customers out there, and their data is more high frequency than the lag of maybe non-farm payrolls or things like that. So it's interesting. I think the 10-year yield is telling us that the data that the CEOs in the 3 major banks are giving us is accurate, and the economy is slowing. How do we trade that? Well, we'll find out. We're going to get a PPI number whose year-over-year numbers are expected to come down pretty significantly there, and then we'll get CPI on December 13th, the first day of the Fed meeting. So lots of data points going on. And, Tommy, I think this market is really reacting to really what we would call a secondary data point, which is unit labor cost that came out yesterday, Tommy. And that number, that 22 around 0.9% is all the way down to 2.4%, Tommy, and that's significant. A big miss in terms of what the expectations were, and a big drop down from the beginning of the year.
It's some great points, man. And yeah, I love listening to some of what those bank CEOs are talking about. And of course, everybody's got our agenda, folks. Okay, they are CEOs of big publicly traded companies. Okay, so they have their biases, they have their agenda that they're putting out there. But that is some data, man. And I was listening yesterday, and I found it ironic, Kevin, and I'll talk about real quickly, man, because you made some great points, and I agree with it, man, that I listen to what they're talking about, because even if you have an agenda, they're putting out straight out facts, okay? And you can take those and do with them what you please. But I see the headline out there on CNBC, and this is from yesterday, Kevin, but I had it up there. It's still somewhere on their website towards the front page. There's a slowdown happening, is the quote. Wells Fargo, B of A CEOs point to cooling consumer amid Fed hikes. And then, Kevin, I have to bring it up because within like one click away on CNBC is that Jim Cramer says not to fear bearish economic talk from bank CEOs. There's no financial apocalypse. I said, oh, man, I better listen to those CEOs, man, now. I kid, folks.
Yeah,
take
exactly
it for what it's
right. If
you're
going to listen to one group over another, listen to the CEOs, don't listen to Jim Cramer.
I listen, man, I was cracking up. I was going to get to those two dichotomies of headlines later in the program, but boy, you teed it up well for me, man. How about continuing claims, Kevin? We got continuing claims, not the top of the data points for the month, but a high number, highest since we've seen since February. So you can't deny that continuing claims, jobless claims on the rise, probably something that the Fed likes to see, probably something we need to happen in this market going forward. What'd you think of those numbers this morning?
Yeah, 8:30 Eastern time, Tommy. We got first-time filers for unemployment insurance, jobless claims, up to 200,000 from 225. That number was upgraded to revised to 226. So that number starting to trend slightly higher. And so it's certainly something to watch. And like I said, how does that move over to all the other data that we've gotten this week? Like we got all the data that we got on Monday on ISM and factory orders. So we're and one comment from the Wells Fargo CEO, Charlie Sharp, he did mention there's a divergence. The downturn in the U.S. economy not being felt equally across all retail customers, like low-income people being hurt more than higher income, and just the overall activities. But yeah, I mean, it looks like some of the lags in the data that Jerome Powell mentioned in his speech on November 30th are starting to hit the economy. We'll see, though, right? We need more data. PPI tomorrow will be significant. And then even though that's the fourth out of four looks we get, that's the fourth most important, it's still one of the top data points in terms of inflation. I mean, yeah, and then the CPI number on the 13th, the first day of the Fed meeting, oh, boy, that's going to be a big number.
And then we get retail sales, right? What is that, a week from today, I think? Yeah, a week from today, as they keep coming in. I always like asking you the easy questions, Kevin. I love the conversation right now talking about whether it's the 10-year, right, where we're going to go next year. There's a huge divergence in terms of what some of the analysts are looking for. Watching Bloomberg early this morning, some are putting out maybe 2.5%. Some are putting out maybe 4.5% next year. We know how that can vary in terms of the economy, in terms of the Fed, where they're going to cut. What do you think of that whole general conversation about, longer term rates right now? We know that short term rates are very high with the Fed. But what's your general take? Because that's one I'm just trying to digest myself, because, boy, that's two different worlds that we're going to be living in, man, whether the person who's saying 2.5 is right or the person saying 4.5 for a 10-year is going to be correct over the next 12 months. What do you think about that conversation right now?
What is the 2-year, 10-year that's trading about 80 basis points?
Oh, maybe we lost him. Is he there? Maybe he's there. Nope, we might have lost him. Okay. Maybe we'll get him back before this break. But that's an interesting conversation, folks. But you heard it, man. Kevin summed it up. Those bank CEOs, folks, I would pay attention to what they're saying because, as I said, whenever anybody's talking, realize that any publicly traded CEO, they have an agenda and they are biased towards their own company. So he's not going to trash their own balance sheet, their own consumers, etc. But there are some hard facts that are contained within consumers' balances. All right, he's back. Kevin, we'll just jump right into it, man. What are you guys talking about on the program today? Because I know we got some earnings coming up, man.
Yeah, big day for earnings. A lot of good. We'll look at broad times. You'll do a presentation on one of our first Lululemon today.
Lulu, man. It's absolutely amazing how they've meandered. What's going on, man? Up to 372, almost even on the year, but off of the 485. Kevin, I appreciate the time on a busy morning, man. We don't talk to you tomorrow. We'll be watching at 12 o'clock, and we'll talk to you next Tuesday, man.
Have a great day. Have a great
Currencies,
weekend.
commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, welcome back. We got markets open. You're looking at an S&P up by about 16 points. We were just above 39.60. Right now, we're trading 39.52, up by about 0.4%. Got NASDAQ 100. Give up some of those pre-market gains. As you see, coming into the opening bell at about 8:30, you were up to as high as 11,600. We're trading right now 11,562. Dow catching a bit up 153 points, and you got the Russell right now up by 15. Jumping around to what we have going on. I talked about it with Kevin. Let's take a look at the numbers. Continuing jobless claims rise to the highest since February. Chairman Powell, he's sipping his coffee this morning. I think he's enjoying that aspect of the economic data. You got to see some of those jobs, folks, whether it's jobless claims rise to some degree. Okay, now when he was making his speech, I think it was last week, right? Last Wednesday, is that when he was talking? One of the points he was making was that, we don't necessarily have to see skyrocketing unemployment, because one of the things that you could see for a tightening labor market is that you could see the amount of job openings decrease, tightening the labor market while not exactly pushing people to the unemployed status. That's true, okay? And it could play out. It was just one of these scenarios that could play out, though, and I'm not sure that's going to be the case, but to some degree, you got to see continuing claims rise up a bit from where they've been, and you take a look at where we are, undeniable that we're seeing rises here, okay? In a big way. And look at that, from where we were to where we are now. We're coming off some crazy numbers when you look at where we were during COVID. You have initial unemployment claims increasing by 4,000 to 230. That's the week ended December 30th. Continuous claims are 1 week delayed, folks. That number rose by 62,000 to 1.7 million in the week ended November 26th. So you don't want to see that skyrocket. You want to find the sweet spot, but you do probably want to see it rise if you want to get inflation under control. The Fed is going to want some of those numbers to rise in order to see the impact of the rate hikes that they've been having. But even this number, right, combined with the robust November jobs report, the latest claims data reinforced that it'll be a slow process to restore the balance between supply and demand in the labor market. Yeah, I would say so, man. California, New York, and Texas posting the biggest increases out there. All right, what else we got pulled up? Talk about the Fed, man. It's all about the Fed. Don't fight the Fed. The Fed's still going to be hiking by 50 basis points next week, folks. Now, Kevin talked about, we got economic data tomorrow. We have a Fed meeting starting on Tuesday. They have an announcement Wednesday, 2 p.m. Eastern Time. Press conference, 2:30 Eastern Time. Retail sales the following day, Thursday, December 15th. And what do we got, folks? We got our man Basil Chapman. He's coming up next live, okay? But boy, we got a treat, man. Basil has never done a live trading webinar, folks, at TFNN. I think he's been here for like almost 20 years. We'll have to check it out, man. Something like 20 years, almost. Isn't that remarkable? Our man, Basil Chapman. He's an outstanding educator, folks, and an outstanding trader, but the way he presents the material during these full day methodology webinars is outstanding, and he's going to be live trading as well, and that's going to be on Thursday. So the cool part is that you get the Fed meeting and announcement on Wednesday. It'll be a slow day usually. That's my, up to that announcement on Wednesday at 2. You get the press conference at 2:30. There'll be some action, of course, as always, but there's usually some action the next day as well. Hopefully there is. You're cherry picking one day. Hopefully we get a good day in terms of market volatility, but nonetheless, Basil's going to be in there live trading. You get retail sales that morning as well. Now, folks, the cost of this live trading webinar, it is 5.5 hours from 8:30 till 2. It's $295, okay? You get a month of his newsletter, folks, which is $149 value right off the bat. So basically, what are you paying, $146 for a 5.5 hour live trading webinar that'll be archived? He's going to be talking about his patterns as well, folks, and methodology. Okay, he's going to be talking about the cup, the arch, the rectangles, bar symmetry, how certain technical tools available on all trading platforms can assist you using moving averages. Basil talks about moving averages often in his show, in his newsletter, The Opening Call, using the Chapman wave notation of peaks and troughs, money management techniques, stops and buy stops, and also he's going to be talking about which stocks, which sectors that look good for the coming first quarter of 2023. So he's got like a 5.5 hour webinar, folks, of live trading. He's going to be focusing on the S&P E-mini futures, okay? But just like any trader, if trades are popping up, he's also going to be looking at gold, crude oil, natural gas. He's going to be using ETFs. He's going to be using some 3 times, so increased added exposure ETFs that I know some of the traders out there love, and looking at whether it's low price stocks, and just basically if the attendees are talking about anything in particular, possibly consensus requests, he'll be looking at those as well. So check it out, folks. Space is limited. I'm not sure we'll hit the cap, but we do these in the Discord room that we have set up. And so we just we want to make sure that it's a enjoyable experience out there for everybody. So we may cap it at some point. So I encourage you to get out there, reserve your seat. You get a month of his newsletter automatically. If you're a current subscriber, you get your next month of your newsletter paid for free. So that's automatically added in there. A great value, man. I'm looking forward to it. Basil's never done one. He is super excited, man. He's been putting this together, folks, for like 3 or 6 months. We've been talking about it. It's finally here. And the best part about it all, folks, is that you're only going to be paying $295. You get a month of his newsletter. That brings the cost down, if you include the $149 to $146. And what do? Go out there, buy some Tiger Dollars during the Tiger Dollar holiday sale. You can get a 20, 30, or 40% bonus on your purchase. You can then use those Tiger Dollars for any service, newsletter at TFNN, Basil's 5.5-hour live trading webinar. That's included as well. So I encourage you, get out the Tiger Dollars. They'll be in there. That Tiger Dollar sale running through this Monday. Okay, so it's Thursday, folks. Get out there, get those Tiger Dollars before it ends on Monday, and then you can use them, whether it's for newsletters, subscriptions, or any of the live trading events that we have going on, like our man Basil Chapman's coming up a week from today. Pretty cool. All right, what else we got going on? Let's jump around and see what we got going on. Yeah, used vehicles. This one's an interesting one, man. I may be in the market for a used SUV at some point. We'll see how that plays out. But used vehicle demand and prices continue to decline from record highs. Wholesale prices of used vehicles reached their lowest level in more than a year last month as retail sales decline amid interest rate hikes, rising new vehicle availability, and recessionary fears. There's a lot going on that's influencing that market. This is the Manheim Used Vehicle Value Index. Not familiar, but nonetheless, tracks used prices of used vehicles sold at its U.S. wholesale auctions, okay, declined 16% from the record levels in January. That's quite a price cut. And you look at that number, that is quite a pullback, man, from where we are. The trend, not your friend over there, man, as we are trading lower. Down more than 35 points since January, well off those numbers. Retail pricing thus far has not declined as quickly as wholesale prices, though, as dealers attempt to hold steady on record high pricing. And this is kind of what the Fed is fighting. That's kind of the point I wanted to get to most in this article, right? So you get wholesale prices coming down, but retail prices aren't coming down. What does that mean? That means that consumers are still spending, folks, because they're making money. So if they needed to get those sales out there, right, they could get their margins down a little bit, but they don't need to just yet. They're trying to keep those numbers there. Average listing price for a used vehicle was $27,564, down less than 0.5% from the beginning of the year, right? Maybe there's a lag there as well. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got a little bit of negative action with the markets open. You just had the S&P spike down to 3940. You give up 15 points right on the open. We spike a little bit. We're up by 9 right now. The Russell gave it almost all up right now. We're as high as 1824. The Russell, I mean, on a percentage basis, man, the Russell just trades bonkers. As you're now just positive by 1 point. You jump over to commodities, crude. You give back some of those gains, up to 75, down to 73.41. You check out the gold contract right now at 17.97. Let's see how some of those currencies are trading with the dollar index. Pulling back to about 105 right now. And you check out the 10-year, down about 21 ticks right now. The 30-year, pretty much where we started off the program, down 1 full point. Let's see how the VIX is trading right now. Volatility index, a little bit of a spike. Oh, pay attention to this one, folks. When you have an elevated VIX and you have an elevated market, those two don't go together, okay? Usually indicative that we might have some weakness here in the market that you'll see play out as the NASDAQ 100 is about to roll over into the red and the S&Ps are barely up by 8 points right now. You have a VIX spiking higher, and meanwhile we have the S&Ps higher. Not usually how it goes, and usually that will sort itself out to some degree. Jumping around to other stories out here, and don't listen to Cramer over the bank CEOs, folks, as Kevin said, and it's important to take what everybody says in the context of their own agenda, okay? Now, Cramer's agenda, you decide what that one is, okay? Bank CEOs, their agenda is leading that bank, okay? But some of the data they point out is undeniable. Now, we're going to jump to some 401k data. Hardship withdrawals hit a record high, Vanguard says. Another sign households feel the pinch of inflation. 0.5% of workers participating in 401k plan took a hardship distribution in October. That tracks 5 million savers. While a relatively small percentage, it's the largest share on record, dating to 2004. That's kind of ominous when you put it that way, man. Inflation has led prices for food, as we all know, to skyrocketing levels. And you want to see a spike, folks? Okay, yeah, 0.5% is a small number, but it's a much larger number than we're used to, dating back to anything we've seen, even back to 2008, 2009, 2010, none of that stuff. Right? Skyrocketing numbers, okay? Non-hardship withdrawals are in the blue, and then you can take loans on them as well, all of those ticking higher, okay? Undeniable that there's a strain on consumers going on in this economy, folks, and that has to have an impact in some degree. And that is 25,000 workers out of the 5 million that they track took one of these distributions, which allow the workers to tap their 401k plans before retirement. And it's a tough deal when you start tapping it before retirement, because guess what happens? When you hit retirement, it might not be there, man. And yeah, I would say Americans feeling the pain in a big way. And that you got to get to 59.5. And sometimes you can't quite get there. You need the cash. Understandable to say the least. But boy, combined with everything else going on in this economy, pay attention, folks. All right, we'll jump over to some of the GameStop meme stocks. Yeah, this market's rolling over. Anytime you see this one, folks, the VIX, okay, this one really doesn't mean it's going to have to happen, but I love this indicator, man. Watch out for this market today. You have an elevated VIX, and then we got what? We got the market in positive territory. Not usually how it plays out, man. The VIX up about 50 basis points to 2318. NASDAQ 100 now in the red. Russell in the red. S&P's up by 4. And we got a caller. We jump over here. We got our man Mike in Ormond Beach. Mike, good morning.
Good morning, Tommy. Thanks again for everything you do. You bring such good topics up for us to be aware of. And I want to bring something to your attention. I have CDs with a TIAA bank. It used to be EverBank. And anyway, I had one that was up for renewal, and I called in to get the current rates. Well, listen to this. The 12-month CD, the regular CD, is 4.15 APY. Now, the 18-month is also 4.15 APY, and the 24-month is also 4.15 APY. Normally, the further out you go, the higher the interest.
That's an interesting one, Mike. Now, EverBank, folks, if you're not familiar, they used to be an advertiser. Man, we're going back some years. Got taken over by TIAA CREF, and then they pretty much brought everything in-house, which is why they stopped advertising at the time. So you're seeing that. Now, what I will say, Mike, I've been looking at it. I'm going to try and pull it up real quick just to see if I can get a quick glimpse of what the CDs are across the board, because it is interesting.
Here's the juicy part.
Go for it.
They have a higher premium group of CDs that they're trying to phase out. However, if you're a current customer, you can still get these, and they're called yield pledge CDs. A 12-month yield pledge CD, which is their premium CD, is 4.15. 18-month drops to 4.08, and a 24-month drops to 4. So it looks like they're anticipating the rates to slowly go back down.
At least for their financial situation, right? That's where the rates they're willing to pull out. I just pulled up on Fidelity, Mike, for some context, okay? Their CD rates. Now, Fidelity, this is not Fidelity's. This is Fidelity's offering of CDs of a plethora of banks across the country. Something like, 75,000, 2,500. So I'll get the exact number, right? They have access to everything in there of fixed income CDs.
Right.
And their numbers go up across the board, Mike.
For other companies.
Yeah, I mean, you're choosing from every single bank out there almost of the CDs. And just for some context here, folks, you're looking at about a year CD. The best rate out there right now on Fidelity's fixed income, and that's 75,000 new issues. There's the number. Over 120,000 total offerings, okay? So for a year, Mike, and this is where you really want to try and go out to wherever, because a year right now, they're putting 4.8%, Mike. For a 2-year, it's 4.8. And for a 5-year, you get up to 5. So they still, the market overall is still dramatically higher when you look at that, okay? And, of course, that's going to be predicated on the yield curve, what you're looking at. But those numbers, the CDs offered for all institutions are much higher than what you just gave me, right?
Right. I
would take a look, man, because I wouldn't be looking.
That with this bank, that the further out you went, that the APY was decreasing. It's like, maybe they were anticipating the rate hikes to slap off.
Oh, no, you're dead on. And even on Fidelity, looking at every single offering across the country, folks, okay? Once you get to a year, Mike, it goes, so you got the 3-month is 4.3, the 6-month is 4.65, the 9-month is 4.75, then you get to 4.8 at 1 year, the 2 years at 4.8 as well. And then the 3 years at 4.85, so barely ticking up, right? And then the 5-year, you're getting an extra 0.15. You're finally at 5, and the 10-year, you're at 5.1. So CDs, a little bit different than the yield curve as it goes to individual banks, their needs, their balance sheets. But yeah, once you get to about a year, man, things really cascading. But the numbers, I would take a look even outside of them, Mike, because 4.1 versus 4.8, man, there's no reason. You like keeping your money there, I get that, but you can open a brokerage account anywhere, man. And that was just cherry picking Fidelity, TD Ameritrade. If you have anywhere that's offering fixed income, that's a big difference right now, man. And they're all protected in terms of FDIC insured. But I appreciate the feedback because it's undeniable, man. The yield curve being inverted. They're looking for lower rates in the near future, man.
All right. Thanks for the info, Tommy.
Mike, I appreciate the call, man. I appreciate the kind words. Appreciate you watching, man. And we'll talk to you again soon, okay?
TFNN has
Stay tuned, folks. We'll be right
their
back.
new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Well, the pullback was short-lived, folks, and we are rocking in higher right now. And yeah, pay attention to the VIX. And boy, the VIX reversed, ran right there, down to 2271. No longer the imbalance, you could say, that we had with the VIX. Still positive, technically, by 6 ticks on the session. But you pull back, you do see some impact in terms of the VIX with the market volatility. You got the S&Ps up by 20 points right now, but folks, we're just back to where you were at 9:15 this morning. Trading at 39.56. You got all the markets in the green right now. You get the gold contract up by $5. We jump over to the dollar index right now. Dollar index back to a 104 handle, 104.92. I want to jump real quickly to some of those rates I was talking about. Great point by Mike in Ormond Beach, folks. And if you're paying attention, you're looking for fixed income in any aspect, be aware of what is out there, whether it's CDs, Treasuries, the inverted yield curve, etc. Okay, and here's a quick glimpse of the rates going on right now. And as you can see, you're looking at new issue CDs on the top. Okay, you continue to rise as you go out. Treasuries, boy, there's your inversion, man. The 6 month at 4.7. The 9 in the year at about 4.7, just a hair under. And then, boy, you talk about a drop off. The 2 years, 4.35. And folks, everybody likes to talk about the 2 year and the 10 year. But look at the drop off from the 1 year to the 2 year to the 3 year, right? The market is pricing in dramatically lower rates, folks, basically coming at you in a period of about 12 months, okay? Now, whether that happens, we will see, okay? But yes, if you're looking for rates on a 2, 3, 4, 5, 10-year basis, undeniable that the market is pricing in lower growth. They're pricing in a Fed that's going to have to cut to spur on growth, and that is, I was going to say that is yielding an inverted yield curve, no pun intended, but it is ending up with an inverted yield curve. So you look at the treasuries, all right, and this you can break down everything from high reliable credit to junk credit, all the way down. But CDs, still some pretty good numbers on CDs, folks. You can create a ladder, create a 2-year ladder, 5-year ladder, whatever you're comfortable with some decent numbers out there. All right, folks, we got markets green. Stay tuned. Basil's up next, and don't forget about his live trading webinar a week from today and the Tiger Dollar sale ending on Monday, folks. Have a great Thursday, everybody.